Hello everybody, back again with the same paper. Same paper means the paper that we started, the latest paper. This is the last year paper, 2021 Business and Accounting first paper. We started this and we have done 2 videos out of this paper, 2021 O-level Business and Accounting paper 1. So paper 1. We have done 2 videos already. Question number 1 to 16, the business studies questions in the first video. Then question number 16 to 30, 17 to 30 in the second video. Those are the accounting questions. Now from 31 to 40, the last 10, again accounting questions, yeah, but these are the, like I always say, the difficult ones. There is nothing difficult about it, but somebody has given this idea to the students. The last 10 are difficult. They are from financial statements, lot of calculations, blah blah blah. Right? Anyhow, there is nothing difficult. All right, just some calculations are involved. That's it. Let's get on with it, shall we? Answer questions number 31 and 32 using the following information. Following are expenses to produce 1000 kilograms of cakes. Now this is a manufacturing business. Producing means manufacturing. Cake manufacturing business. Yeah, you can at once guess that this is from which lesson? Question is from? No, not non-profit organizations. No. Yes, that's right. Production cost. This question is from production cost. Statement of production cost. So they say expenses to produce 1000 kilograms. Okay. Now when they say 1000 kilograms, you should know these, the business is talking about 1000 units of production. Kali 1000. That is the common casual language. 1000 kilograms of cake. Okay, 1000 kilograms of cake during the month ended 31st March, for the March month. Okay, wheat flour needed, for the wheat flour need of wheat flour, they have spent 100,000. Eggs 10,000. Other materials 20,000. Wages of cake maker, that the baker or anybody. Rent is given, and electricity is given. Okay. 31st question, the question that they are asking us is prime cost for the production of cakes for the month ended 31st March. Prime cost. They have given us some information and they are asking for the production of cakes in that month. What is the prime cost? What is the prime cost? Okay. How do you calculate prime cost? Easy question, but just to check your memory, tell me how to calculate prime cost. Tell me. You have to tell me. How to calculate prime cost? Direct materials, direct labor, direct other expenses get together and they form prime cost. Direct material cost, direct labor cost, direct other. These three costs get together. The addition of these three is the prime cost. So that is what we should add. Now identify what are the direct costs. Wheat flour, is this direct? Of course, this is direct materials. Eggs. Well now, direct materials means the main materials used to produce the good. No. Here the given good is cake. No. Here in this business, what they producing? What are they producing? Cakes. So the given production is cake production. For the cake production, of course, the main material is wheat flour. But what about eggs? Without eggs, can you make cakes? Try and see. That is also direct material which cannot be omitted, which cannot be, eggs must be there. So it's a direct material too, right? But how do you guess which materials are direct materials? How do you guess? The main material only, which is used to produce goods. Well, it's like this, children. Let's not say main material. Let's not say main material. Main raw material taken to produce the good. No. Let's say the materials, raw materials, which can be clearly identified in the finished product. The raw materials which can be clearly identified in the finished product. Let's say furniture. The good is furniture, not cakes. The good is furniture. We did this lesson, right? If the good is furniture, the main material or the material which can directly can be identified when the furniture product is finished is wood. Maybe if it is a sofa or settee set, cushion is also there. Cushion is there, right? So likewise, wheat flour is the main material to produce cake, as well as eggs must be used. So both are direct materials. Okay, I hope you remember the lesson now. Other materials we cannot take. It's not specified. We don't know what materials. Maybe yeast, maybe essence. You can't see the yeast and essence and those things in the finished product. Okay, right? Wages of cake maker, direct labor, the laborers who directly get involved in making the product. Okay, everything, the mixing and the hammering and the cleaning and the polishing. Cake, hammering the cake. No, I was talking about furniture manufacturing. In cake manufacturing, the mixing and the making the dough, that's what you call, and baking and everything, the cake maker is the direct laborer. Rent of the business is not direct. Electricity of the business is not direct. Okay, so let's add up 100,000 plus 10,000 plus 45,000, 155,000. Is it there? It's there. 155,000. Okay, second answer. Okay, you got this right. Direct materials, direct labor, No direct other expenses. Nothing is given. Usually direct other expenses are royalties and patent license fees. Those are the main two direct other costs. Royalties, license fees, I have told you, I have explained these things when I was doing the lesson. Production cost statement. All right, 31st done. 32nd. Same case. What is the selling price of 1 kilogram of cake if retaining a 10% profit margin? There is a profit margin given. There is a profit margin given. See, 10% profit margin. How is that? 10% profit margin. Well, that is a good profit. Whatever the cost, production cost of a unit, 1 unit, in other words, unit cost. On the unit cost, 10% is added as the profit. Add the profit. It's not a bad profit margin, not a very high margin, but 10% is good. Let's calculate the unit cost first. Expenses given to produce 1000 kilograms, not 1 cake, not 1 unit, 1000 units. So we have to calculate 1 unit cost of 1 cake. Okay, wheat flour 100,000. Let's calculate the prime cost first. A quick calculation. Prime cost. Calculating the prime cost. Wait. Calculating the prime cost. What items should be under prime cost? What items? We already took the prime cost now. Wheat flour 100,000. Direct materials. Eggs, direct materials 2. Wages of cake maker, direct labor. And we took 155,000. In the previous question, the answer, prime cost. Then we have to take what cost? Should add what cost? Overhead cost to the prime cost. When you add overhead cost to the prime cost, you get total cost. Okay. Okay. Prime cost is 155,000. Overhead cost. How much is the overhead cost? Let's find out. Find out the overhead cost. We have overhead, other materials, indirect materials. Okay. Rent, indirect, other. Electricity also indirect. Take those and add up. Other materials 20,000. Rent 10,000, 30. And electricity 15,000, 45. 45,000 is the overhead cost. Let's take the total cost. Add up the two and you get the total cost 200,000. This is the total cost. Okay. Total production cost. Total production cost is 200,000. Unit cost. How to find unit cost? Unit cost is calculated by dividing total production cost by number of units. So 200,000 divided by number of units. How many units? It's there, it's there. Tell me. Shall I turn around? It's there. 1,000 units. 1,000. Answer is 200. This is the unit cost. Rupees 200. 200 rupees is the unit cost. Did we find the answer? Oh yeah, the answer is here, 200. Yeah, okay, nice. No. That is not what we are calculating. We are calculating the profit margin, children, not the unit cost, the profit margin. We found the unit cost and that is not the answer. Okay? That is not the answer. What is the selling price? They are asking the selling price after keeping 10% profit margin. Okay? 10%. Have to calculate 10% out of 200. So what do you do? What do you do? What do you do? You take 200 into 10%, 10 over 100. Answer is how much? 20. 200 plus 20. 220. That is the selling price. Here we go. 220. That is the fourth answer. Fourth answer. $220. Some children, they just go on doing the calculations and they get this answer, you know, the 200. What is the unit cost? They get this 200 and they see the 200 here and they underline that. Wrong. You know how they go wrong? How you go wrong? That is how you go wrong. Okay? Pay attention to the question again and again and again. Read the question. Always have an eye on the question. Next. 32. 33. Answer question number 33 and 34 using the following information. Cases. These are like case studies, you know. Sulochana's business is conducted in a rented building for 10,000 per month. 10,000 is the monthly rent, Monthly rent, okay, 10,000. 80,000 has been paid as building rent for the year. Oh, they are taking already. Oh, they are giving you monthly rent and they are talking about 1 year. Isn't it? See? Rent for the year. They are talking about the monthly rent. See? And then asking the question about an year. That is how they do it. That is to confuse you. You will go wrong most of the time. 10,000 per month. Which means for the year, how much is the total rent? How much is the total rent? Annual rent. 120,000. Annual rent is how much? 120,000. 120,000. How much is paid? Paid. 80,000 has been paid. They are giving. 80,000 has been paid. They are giving that. See? 80,000 has, only 80,000 has been paid, see. How much is accrued? Now you have the answer. 80,000 is paid. If 80,000 is paid, how much is accrued? 40,000 is accrued. From out of 120,000 annual rent, 80,000 is the paid rent. 40,000 is the unpaid rent. Unpaid means accrued. Unpaid. 40,000. Or you can say accrued. Now you look at the question. What are they asking? Are they asking how much is the unpaid rent? We just found the unpaid accrued rent. The question is asking, select the journal entry relevant to the adjustment of building rent. They are asking for the building rent, how to adjust the journal entry in Sulochana's business for the year ended. Building rent account debit 40,000, accrued building rent account credit 40,000. I think that is the answer. The very first one. I don't know, I just feel it. Why? Because accrued rent means it's a liability. Accrued rent means a liability. It's a liability. Liability increase. Unpaid rent, we have to pay 40,000, still did not pay, so now it's a liability altogether. We are owing the building owner 40,000. That's why we call it a liability. Got it? That should be credited to the building rent accrued account. Liabilities are liability increases, credit. Liability increases, credit. So accrued building rent credit 40,000, building rent account debit 40,000. This is the answer. There you go. You can't take the second answer, no? Obvious, no? Receivable building rent. We are not receiving building rent. We are talking about paying building rent. So third answer also can't take. Cash. They are talking about, they are asking about the journal entry to adjust the building rent for the year ended. Adjust the building rent, the accrued amount, accrued value. This is the accrued value, 40,000. This is the accrued value. Okay, so you can't take the second one, you can't take the third one. Can't take the fourth one also, because in the fourth one they have given the entire total value. First is the answer. Text 34. Building rent should be included in the statement of financial position of Sulochana's business asset. How much of building rent should be included in the statement of financial position? This is Sulochana's business. Rented building for 10,000 per month. We calculated that per month, if per month it is 10,000, per year annual it is 120,000. Okay, out of that only 80,000 is paid. No, only 80,000 is paid. So you must subtract the paid amount, 80,000. Then unpaid amount is 40,000. Up to that we have done. Seriously? Don't look confused. Too much explaining. I'm not going to explain it again. Now what they are asking is, if 40,000 is unpaid, accrued, They're asking what value building rent, what is the value of building rent? That should be included in the statement of financial position as at 31st December 2022. Okay, statement of financial position. Is it building rent receivable? No. Is it accrued building rent 80? No, not 80. Accrued is 40. Is it 120? No, it's accrued billing rent 40. First is the answer. Got it? Easy peasy lemon squeezy. 35th question. There we go. Financial statements. The hardest part for some children. I don't know why. Let's take on the questions. Answer the questions number 35 to 40 using the following information. The trial balance of Kusal's business 31st December 2021 is follows. Trial balance of Kusal's business. Okay. As at 31st December. Right. Okay. We have sales, we have purchases, we have stock, we have motor vehicles, bank loan, cash, insurance, received rent, employee salaries, capital, debtors balance, creditors balance, bank loan interest, and finally the trial balance is balanced. See, it's balanced. No problem in the trial balance. Additional information, okay? We call them adjustments. Remaining stock, 31st December, 80,000. What is that? Remaining stock, 31st December. Remaining stock, 31st December. Closing stock, don't think, okay? Closing stock. Remaining stock as at the end of the year, 31st December, December mase avasani, 31st December. No? It's the closing stock. Now you don't have to think, you have to know these things. 4,000 should be written off as bad debts. Is that so? Bad debts are irrecoverable debts. Written off bad debts means this is an expense. Expense. Next, rent to be received. Oh, rent to be received. Rent to be received. To be received. Accrued rent. Income. Accrued rent income. It is an income. You don't think, don't even think. As soon as you see the word rent, some students think, rent, expense. No. Okay, expense. No. This is an income. To be received, see? To be received. Accrued rent. Income. Because if it is an expense, they don't say to be received. They don't say received. No. They say to be paid. Small things that you should notice. Okay. Next, what do we have? We have it here. The question. Well, the trial balance is given, children. The trial balance is given here. Okay. The same trial balance. No, just for your reference only. Yeah, it is the same trial balance you have right here. This one, the same one is given here, just for your reference. Okay. Additional information also given here. See, it's easy for you now. No, I mean, when we have the information just side by side with the question, now it is easy to refer. That is why I am taking the layout, the slide arranged like this. Okay, read the question. The question 35: cost of sales of the Kusal's business for the year ended. Oh, the cost of sales. They're asking for the cost of sales, huh? Okay. Easy. Cost of sales. How to calculate cost of sales? Cost of sales. How to calculate the order to calculate cost of sales? Opening stock plus purchases minus closing stock. Okay. Plus minus. But if you have purchase related expenses, you have to mention those. Purchase related expenses. Can't forget those. Like carriage inwards, like loading expenses, unloading expenses, all should be added to purchases. Let's see. We have sales. We have purchases, 200,000. Mention it under purchases. I mean in front of purchases. Purchases 200,000 taken. Stock as at 1st January. Opening stock. That is it. Opening stock. 100,000. Okay. Took 2. Any more? Motor vehicles, bank loan, cash, insurance, received rent, employee salary, capital, debtors, creditors, bank loan interest, nothing. No carriage inwards, no loading expenses, no unloading expenses, no import duty, nothing. Closing stock is here. It is here, the closing stock. 80,000. Take the answer. How much? 200,000 plus 100,000, 300. 300 minus 80, 220,000. $220,000. That is the cost of sales. You got it. Cost of sales, 220,000. Oh, okay, wait. It's here. The answer is the second. Okay. Right, good. Next question. 36. Gross profit of Kusal's business for the year ended. gross profit. How do you calculate gross profit? How do you calculate gross profit? That's right, cost of sales plus sales. No. Sales revenue or sales income minus cost of sales. Yeah. We already took the cost of sales, didn't we? We did. Now gross profit is calculated. Let's do it on the same page. Should calculate gross profit. Sales we did not take. Cost of sales we already took. It's 220. It's great to see. A calculation done so clearly, isn't it? Cost of sales 220,000. If you are having trouble, I'll just do it this way. How is that? For the weakest one, for the one who missed the lesson, for the one who is without information how to calculate cost of sales, I did that unnecessary thing. It's probably unnecessary, but I did it anyway. Cost of sales is calculated in this manner, opening stock plus purchases and minus closing stock. Okay, I mentioned that if there are purchase related expenses should be added to purchases, like carriage inwards, loading, unloading, import duty, blah blah blah. But no information is given as such in this question. Okay, in this trial balance, no. So nothing to add to purchases. Opening stock plus purchases minus closing stock, easy calculation. We took the closing cost of sales 220,000. Now gross profit. Sales minus cost of sales is gross profit. Sales is 450. It is there. We'll mention it on top. Sales income or sales revenue 450,000. Can't you see this? You can't see this. Now you can see, right? Right. Yes, you can see. This is sales, children. This is sales, 450,000. This one, okay. This one is sales, 450,000. I'm mentioning it here, 450,000. Subtract sales minus cost of sales. Sales minus sales income minus cost of sales. What is the answer? That is gross profit. 180,000, right? Is it? No, it's 220. Okay. 450 minus 220. 230,000. That is gross profit. Yeah. Gross profit. Let's see whether that is given. it is there. 230,000. There you go. We have it. We have it. We have. The answer is there. 230,000 gross profit. Next question. What is the net profit of the Kusal's business for the year ended 31st? Okay. They are asking the net profit now. Kusal's business. Net profit. Okay. Are we able to work it out here? I mean, here. We have space, right? We'll do it here. No need of blank spaces. This 230,000, I wanna state or write nice and clean like that. Then what I have to do is add the other incomes plus other incomes and minus expenses. Plus other incomes and minus other expenses. Got it? Got it. Yeah. Children, now as I said, 1.5 minutes for each question. Okay. Now I spent like 3 minutes, maybe 5 minutes to work out. But in this working, we are taking the answer of 3 questions. Got it? First we found the cost of sales, then we found the gross profit. Now we are finding the net profit. Right. Let's find out what is the net profit. We need this. We need the other incomes. How much of other incomes are there? Children, other incomes you should find. Nobody's gonna point out. Sales already taken. Purchases already taken. Opening stock taken. Motor vehicles is an asset. Bank loan is a liability. No assets and liabilities in the profit and loss statement. This is the profit and loss statement. It's a rough sketch of a profit and loss statement. No need to rule the statement and follow the formats in the MCQ paper. Just do a rough working like this. This is the profit or loss statement. Very, very basic, very, very rough. So don't take anything unnecessary like motor vehicles, bank loan, cash balance. Wait, there is a hidden adjustment here. There is an expense here, okay? There is an expense here. Although bank loan is a liability, 10% bank loan interest should be calculated. All right. So have to take this. Cash balance, don't take it. Insurance fee, have to take expense. Received rent, have to take income. Have to take as a income. Employee salary, expenses. Capital, no, you don't take. Debtors, you don't take. Creditors, you don't take. Bank loan interest, it is given. It is a given. What is given? Bank loan interest. It's related to this, the bank loan. Okay, let's work it out. 10% is the bank loan interest given. Bank loan is 100. 100,000 into 10 over 100. 10% no. 10% no. Answer is 10,000. Answer is 10,000. Okay. Got it? You got it? Got it. Yep. Okay. 10,000 is the bank loan interest, but given interest is 8,000. That is the paid. We don't take paid amounts. We don't mention the paid expenses only in our profit or loss. No. Accrued should be adjusted. Prepaid should be adjusted. Why? Because we don't take only the paid expenses. We take the total expenses relevant for the period, for the full year. So interest paid is 8,000, but interest correct amount is 10,000. That is what we should take. There is an accrued of unpaid amount of 2,000. That is, we can mention unpaid 2,000. Just in case. Just to make it clear to you. 2,000. Okay, right, no problem. Now you should look at the additional information, but if you did it in the first place, that's better. I mean, if you looked at the additional information before you looking at the trial balance, it is better. Let's look at the additional information now. Remaining stock means closing stock. See, I have marked it here now. Yeah, closing stock. Already taken. Then we have something. That is a bad debt. 4,000 should be written off as bad debts. That is an expense. Another expense. It is should be mentioned here. It is an expense. Okay. Rent to be received. That is income. Income accrued 2,000. Rent to be received 2,000. Accrued income. That should be expenses, incomes. Okay, that should be added to the given rent here. Received rent 3,000. Okay. Got it? Because received only 3,000, but as I always say, we have to calculate the relevant amount, the relevant value for the period. Simply saying, how much is the total expense or total income for the accounting period? That is why we always talk about accrued and prepaid. Not taking only the paid amounts or received amounts. The received is 3,000. This 2,000 should be added. So 3,000 plus plus 2,000. Okay, that's done. Now we can take the total. Take the income first. Received rent 3 plus accrued rent to be received 2. 3,000 plus 2,000, 5,000. Let's mention the other incomes right here. rent income 5,000. Okay, now take the expenses. Now let's take the expenses. Okay. 1. Bank loan interest. We have to write interest. Bank loan interest expense. That is 10,000. That is 10,000. See, it is here. No, we calculated that. Bank loan interest expense is 10,000. We calculated. Already calculated. 10,000 plus next expense is 7,000. 17,000 plus next expense 12,000. 17,000 plus 12,000. 29,000. So we took this one, bank loan interest expense 10 plus insurance expense 7 plus employee salary 12,000. 29,000. Did we recognize any other expenses? Oh, did we now? Yes, we did. This expense. Bad debts 4,000. 29,000 plus 4,000, 33,000. 33,000. This is an income. Rent received, we already took that. 33,000 is the total expenses. Whoa, did we take the bank loan interest? Yeah, we took 33,000. Should be subtracted. This should be added. Income should be added and take the answer after adding the other incomes. 235,000. 235,000. Okay. 230,000 plus other incomes 5,000. 235,000 minus other expenses. Is that clear to you? Just let me make it very clear to you. Okay, other incomes, rent income. After adding the rent income, let's take the total 235,000. Now it's clear, right? Okay. Now expenses should be subtracted, no? Subtracted. Uh, 235,000 minus expenses, 33,000 minus expenses. Okay. Answer is how much? 235 minus 33. 203,000. That is the net profit. Net profit or profit of the year, profit for the period. 203. Let's check whether the answer is there. Gross profit, this is the 36th question. 37th, net profit. Whoa, where is that? 203,000 is not there. Whoa, wait. Silly. When you minus 33,000 from 235,000, it's 202, not 203. It's 202. Why didn't you show me? 202, not 203. Answer is there. Here. 202. Yep. That is the net profit. Kusal's business. Okie dokie, let's move on. 38th question. The amount of total liabilities of Kusal's business. Total liabilities. Amount of total. Not current liabilities, not non-current liabilities. The addition of both. Total liabilities. Let's go to the same page, same slide, where we have marked, the colorful everything. Yeah, this is the net profit calculation. Gross profit and net profit. Gross profit and net profit. The important information is mentioned on this side. Okay, let's mark the liabilities. Mark the liabilities. Mark the liabilities. Sales, it's not a liability. Purchases, stock, opening stock, no. Motor vehicles is an asset. Bank loan is a liability, right? This is the first one. Let me circle those. Use a different color. This is the first liability we found, bank loan. Okay. Right. 100,000. Then we have cash balance, insurance fees, received rent, employee's salary, capital, debtors. Then we have creditors. That is the next liability. Creditors. Current liability. Don't forget the additional information. See, first one, remaining stock, it is the closing stock. It is not a liability, it is an asset, current asset. 4,000 should be written off as bad debts. Expense. Rent to be received. Accrued income. See, I have marked it. Incomes. Accrued incomes. Assets. Current assets. So, no liabilities here, right? Rent to be received. We have to receive. Yeah. Supposed to receive them. But there is another liability. And that is hidden. But I have marked it. See, unpaid interest, bank loan interest 2,000. I have marked it here. Bank loan interest 8,000 is paid. 10,000 is the total interest. So 2,000 is accrued. We have to add these three. 100,000, 135,000, 137,000. Let's check. 137. It is here. 137. 137. It is given. Can you see it? It's here. That is the amount of total liabilities. Okay. Anything else? Remaining stock is a closing stock is an asset. 4,000 should be written off as bad debts, that is expense. Rent to be received, not yet received, supposed to receive. That is accrued rent income. Accrued incomes are assets, current assets. That's it. Now 39th question. Amount of total assets of Kusal's business. Amount of total assets of Kusal's business. Total assets. Assets. Well, now we have to go back there. We'll go back there. Because all our workings and everything is there. This is the place where we have done the working. Assets. Let's mark assets. Use another color. Blue. That's blue assets. That's blue. Sales, purchaser, stock. But this is the opening stock. Don't take it as a current asset. Closing stock is the asset, current asset. Inventory, closing inventory. So don't take this. Motor vehicles, this is a non-current asset. Motor vehicles, it's a non-current asset. No depreciation is given. Even in the additional information, no depreciation. So we don't have to depreciate. Take the cost, 800,000. Then bank loan, liability, no. Cash balance is an asset, current asset. Insurance, received rent, employee salaries, capital. Debtors is an asset. That's it. Do not forget the additional. We have stuff here. Remaining stock. This closing stock is an asset. Current asset. Just like I said. Then, did you notice this? Written off from debtors. You can't take debtors the given amount, although I have circled it. The bad debt should be subtracted, 4,000. The bad debt should be subtracted, 4,000. Yeah. Let me make it clear. Now, I'm talking about this, debtors. Right. 40,000 is the debtor. Debtors balance. 46,000, I'm sorry, 46,000 is the debtors balance. From that, subtract 4,000 because the bad debt you can't forget. The bad debt you can't forget. This is a bad debt. See, from debtors, okay. Then another asset is here. What is it? Rent to be received. Debtors, 4,000 should be written off as bad debts from debtors. That is what they say. So debtors, of course, should be subtracted. That is what I have shown here by 4,000. All right. Then we have another asset that is already marked, the rent to be received. This is 2000. Okay, let's take the assets total. Huh? Shall we take, or are you going to take? Let's take. Motor vehicles is the non-current asset, 800,000. Plus cash balance, 815,000. Plus debtors, 46 minus 4, 42. So 800,000 plus 15, 815,000 plus 42, 857,000. Okay, 857,000. I'll just write it here. 857. I'll just write it here roughly to do the calculation. 857,000. Okay. Yep. Done with that. Then we have the remaining stock, the closing stock. The closing stock, I already mentioned it a few times. Yeah, I mentioned it a few times. The closing stock, 80,000. And we already took this, the 4,000 bad debts written off. It's here. Rent received, to be received, 2,000. Okay. Now take the total. Guess how much? 857,000 plus, let's take 2,000. 857,000 plus 2,000, 859,000. 859,000 plus 80,000. 939,000. Is it correct? Let's check this amount. 8, not 8, it's 9. 939. 1, 2, 3. No, next one. The amount of total assets of Kusal's business. Amount of total assets. 939, it's here. What did we take again? Because we have a very clean and clear slide here. Let's mark. Motor vehicles we took. Cash balance we took. Debtors we took after subtracting the bad debt. Came from here. Okay. We took, right? The closing stock we took. Then this is already taken. Rent to be received we took. Done. Next question. Equity. Now they are asking for the equity of Kusal's business. It's easy. Equity is given. Where? Equity is given here. Equity is given 600,000. But that is 1st January. See, this is 1st January. They are asking the equity 31st December. 31st December. They are asking for the equity on 31st, as at 31st of. How to calculate? How do I get out? Yeah, easy. I always tell you, there are 2 transactions only, 2 events only that increase equity. Profits, incomes or profits, or additional income, additional capital. There is no additional capital in this question, but there is a profit. What is the profit? It's the net profit, not the gross profit, man. Net profit. 202. So the net profit should be added to capital. That's it. No drawings, no additional capital, nothing. So 600,000 plus net profit 202. 600,000 202 should be added 800 should be added, and you get how much? 802,000. Is it there? It's there. 802,000. Okay. Capital plus net profit. Got it? It's the answer. How did you get the 202? 202 is the net profit. Okay, done. Children, this is the 2021 Business and Accounting first paper, the MCQ paper, the last 10 questions. The questions mostly coming from financial statements for business. All right, with that, we wrap it up today's session. 40 questions done. The first paper is over. Do get together with me to finish off, to work out the questions in the second paper and to finish off the second paper too, just like we finished the first paper. Till then, as I always say, work hard for your dreams. The best way to predict the future is to create it. Just like in my Children's Day, International Children's Day wish, I always say, be fearless, take risks, be open and honest to yourself, and believe in yourself. You can achieve anything, my dear children. Thank you very much. Let's get together and start the next paper in the next video. That is the 2021 second paper. Until then, thank you very much.